Folks, on Wednesday, the Fed held their line on interest rate. No rate drops yet. But they indicated if the economy continues to go sideways, they're going to start dropping rates. What does it mean for the market? What does it mean for the economy? What does it mean for the future? All right, we're going to get into all of that in today's video. There's a lot of talk, a lot of speculation, but let me be very clear. Let me give it to you step by step. Let's get into it now. First, if you're stressing out over what the Fed decision means for both stocks and bonds, then it's time to shift your perspective. Click the button below to find out how to identify the strongest, most hard-charging stocks and the #1 bond asset to pair them with. All you've got to do is ride these stocks or their options and boom, clockwork profits. Check out today's news in this video, then click the button below to learn a new plan. All right, so the Fed has spoken, they drew a line, they're not going to cut rates yet. What does that mean? How does that affect the economy? How does that affect the stock market? How does it affect global economy? Let's talk about it. Okay, so the bond market, the futures price in everything that's known right now. They're pricing in a 25 basis point drop in rates in the next FOMC, which is happening July 30th, 31st. So we're right now already pricing that in. Now, let me give you some fundamentals. There's an inverse relationship between yield, interest yield, and bond prices. So the lower yield gets, the higher bonds go. Now, right now, I'm seeing the 30-year bond, all right, resistance at the 30-year bond at the 160 level. The 10-year bond, I'm seeing resistance at the 127 level. What does this mean? These are long-term resistance levels. That means if they rise above these levels, that means the futures market, pay attention to what I'm saying right now, this is important. That means the futures market, notice the word future in futures. The futures market is implying that the rate hike in July may be above 25 basis point. So that's why these levels are very crucial to look at right now and pay attention to. If you see the bond market, the 30-year trading above 160, that means traders believe the rate drop. I keep saying rate hike because this is so natural. We're all expecting rates to go up, not down now. But with the economy going sideways, we are expecting 25 basis point drop. Now, why is the Fed doing this? The Fed is doing this because they're anticipating the China-Trump trade war to last substantially longer, and they're expecting U.S. economy to slow down and global economy to slow down. Also, global markets are already reducing rates in some countries. So this is not a surprise. It wouldn't be a surprise for us to see a 25 basis point drop. But it means what it's doing is this. It's giving the stock market a cushion, a soft landing. So if Trump comes out tomorrow and says, we're still going to have a trade war, we're going to raise tariffs, the Fed has a parachute for the stock market. The Fed has a very strong vested interest in keeping the stock market strong. That's why every time you see stocks hit the 200-day moving average, we see them pop back up, all right? So if nothing works out with China, there's a silver lining, all right? And that's Fed willing to work with Trump, and that's very important. But here's what you need to know, and this is what's really, really important. If you see bond market, the 30-year, trade below 160, it's safe to assume that the market is still pricing in a 0.25 basis point drop. But if you see the 30-year start moving at 161, 162, that means we're now expecting 0.50%. The market is now expecting a 0.50% drop, 0.50% drop instead of a 0.25% drop. So it's very important to notice these levels because they're going to give you a gauge of what the market believes versus what the Fed is saying. And that's very important. Now, the stock market, I'm expecting if the Fed continues dropping rates and being accommodative to the stock market or accommodative to the Fed, to the economy, we're not going to get a bear market and we're going to continue seeing the stock market drop to the 200-day line. The Fed will announce that they're not going to raise rates and they may drop rates some more. We're going to see bonds continuing to go higher and probably drop 0.50 if nothing between US and China is decided by July 30th, 31st. That's almost a promise at this point. But right now, the bond market doesn't know it, so it's only pricing in a 0.25 basis cut. Hope that helps. Keep your eye on the 30-year bond, on the 10-year note. These are futures contract. and pay attention to the 127 resistance level on the 10-year and the 160 on the 30-year, because that's going to let you know whether the 0.25 stands or whether the Fed may go higher and cut by 0.50, which would really cause the stock market to go up strongly. Hope that helps and hopes that answers your question. Wonder what I'm up to? I'm trading using the most profitable phenomena I've ever found in the market. A set of 3 simple yet powerful indicators that I use to catch high momentum stocks and option breakouts. They trigger every 2 weeks. And since 2010, they would have multiplied your portfolio 331 times. The beautiful thing about this strategy is that it perfectly pairs high caliber stocks with bond hedge. Click below to learn my momentum strategy now.